So what is bias and how do I get it right about 80% of the time? I'm going to show that today. It's quite an in-depth explanation, but I'm going to go through some stuff on the charts and just explain how I actually see bias in itself and how it's actually used within the trading day. And if you don't understand how to actually find bias, or you're watching a lot of videos on how to find the bias and they're not really making a lot of sense, this really should start to clear things up and get you thinking about how you're going to find it in regards to your particular strategy or your style. So to get into it, first of all, we have to actually tackle the word itself, bias. Obviously, people refer to higher time frame bias and lower time frame bias. There are almost infinite time frames because price is price. So what is lower time frame and what is higher time frame relative to you? If you're watching someone on YouTube and you're watching a YouTube video and you're trying to copy them, you're not going to be referencing the same kind of higher time frame and lower time frame. So for the purposes of this video, I'll try and explain which time frame I'm using and what that actually means to me. So because I'm trading within, I'm trading in futures, I'm trading on the intraday chart, specifically the AM session, and I like to trade essentially 2:30 up to 4. I can go after 4 to 5, but I'm focusing mostly just on where this session is going to go. So sometimes, for example, I'll say, right, my higher time frame bias is higher. However, this particular day, and when I say day, I'm usually referencing just the session, to be honest, because that's all I care about. It looks like it's going to go counter to that and actually, let's say, pull back into a range, or pull back as part of a retracement in relative to a higher time frame bullish move. And I'll show examples of that. I'm gonna scour through the charts and have a little look. So that's my reference point. That's where I come from. And then, I essentially do a top-down analysis at the start of the day. I go all the way, usually from monthly, just give it a little quick glance, and I go all the way down. I'll explain what I do there, what I'm actually looking for at the start of the day, and how I'm actually able to successfully get it right about 80% of the time. Before I go into it, there's another thing to mention, which is to get it right a lot of the time, you need to not be trying to have an opinion every single time. There are going to be times where you don't really know what's going to happen, and waiting for a little bit of information at the start of the session is going to make all the difference. So there are some days where I'll say, some days it's even as simple as whichever way the session starts to move at the open, I'm going that way for the day. And that could be because we're at a particular tipping point where I say, well, yeah, do you know what? The market should go higher, let's say, but I want it to be supported right at these lows where it's sitting right now when I'm analysing it, say, at UK time 2 or 2:15, which US time, New York time would be 9 or 9:15, so just before the 9:30 open. I'm saying, look, I want this to move away bullish at the start of the session. If we start moving bearish at the open, that completely takes away that idea, and actually I'll be going short. So a lot of the time, it also relies on having an open mind and seeing what price is going to give you, and not trying to place that fixed bias every single time, unless you genuinely have a good idea where price is going to go, for the reasons that I'll go into here. So if we're just looking at the S&P here, really what I'm doing is I'm looking for areas of previous support. I'm looking for, if you're thinking in terms of ICT concepts, I'm looking for PD arrays that have previously supported price in relation to the current order flow, so bullish order flow. So if I'm looking at the monthly here, not that it's particularly relevant, I'll go in here and I'll say, right, there's a fair value gap. Cool, you can clearly see it supported price here. If we go and mark in the 50% right here, you see that price bounced back to that 50% level. Put this in dark red. And then we've moved away. So on a weekly perspective, that's a good area where, price found support. We've also got an area up here as well. Can't really clearly see it providing support. I like to see stuff like the bodies at the consequent encroachment of the fair value gap. I like to see these wicks down into the premium or the consequent encroachment of that fair value gap as well. So this fair value gap is a little bit less relevant. And generally on an intraday perspective, I don't need to go back and mark out these big areas. It's not really relevant. I'm having a look at the monthly, just as a general look at where we are. Have we started the month, say here, wicked down, and now we're coming back up towards it? Maybe there's not a wick on top. We're getting close to the previous month's high, that kind of thing that will give me an idea about where price is likely to go next. More importantly, I'll be looking at the weekly time frame. So I'll be looking at previous areas of support, and this is necessary to mark out places where price has already reacted from, despite you not having actually traded it. It's still important to go back and mark out, okay, it's found support here. So what I'm actually saying here is, generally, if price is going to go higher on a weekly time frame, I don't really want to see it come back to this area here. Now, because it hasn't filled in the whole fair value gap, I could make an exception. In this particular market, the fact that we're so bullish, we're breaking out of this range here, to me means that we shouldn't come back to this. But in some cases, yeah, I might say, right, we could come beneath both of these lows and then react off of that and go higher. That would also be fine. But I'm looking at these, and at certain areas where I'll say, I definitely don't want to see price coming back here. Otherwise, this changes order flow. And I think that's for another video, which is ICT says 3 PD arrays break and order flow changes. 3 PD arrays of what time frame? Because generally what will happen is you have a break of a lower time frame PD array to then hit a higher time frame one. So you'll pull back, you'll crack through the 5-minute fair value gaps after say a bullish expansion at the start of the session. You'll move back through them, but then you hit a 15-minute, the midpoint of a 15-minute fair value gap, and then you'll start moving away to the upside. So I'll look at something like this. I'll go down to the daily chart. If I was looking at it today, obviously we're at all-time highs, so generally my bias is just bullish. When you're at all-time highs, don't be trying to catch the reversal move. Generally just keep looking for price to go higher. Also, we can pull back with some little short-term lows and stuff like that. But generally the bias is higher, so this is not really very useful here. But I'll be looking at areas like this. Okay, this has been left open. There's nothing really here in terms of daily support. I'd go down to the 4 hour. I'd say, right, where's the last area that 4 hour support was found? It's right here, fair value gap. And I mark out order blocks sometimes if they're particularly relevant, but I usually don't mark them. You can see down here as well, it's also been supported. So generally, with 4 hour bullish order flow, we don't want to come down past this low. We can come back down there, but then I need to have the context behind it. So also a side note would be, like, if we were coming back down to big retracement, and let's say I want to look for higher prices, I would not be referencing this 4 hour fair value gap. Why not? Because there's a daily. There's a daily right here. So most of the time, price will forego the lower time frame fair value gaps for the higher time frame. It will often enter the higher time frame one. So in this case, if I saw a price that was trading around here, I'd be looking for it to trade into that daily fair value gap, just as a side note there. And essentially, I just go down and down the time frames, and I mark out those previous areas of support. So hourly chart, and again, today, bank holiday, we're at all-time highs, a really crappy time to be giving an example of why things are going to happen next, because generally I'm just bullish. At this point, I'm just bullish or consolidating this, and I would actually use the lower time frames at this point to dictate continuations or reversals. But nonetheless, I'd keep on going down, and I'd go down till it's really not relevant anymore. So 5 or 15 minute or 5 minute before the session, I like to go through and like to mark out the 15 minutes. I'm a lot more relaxed on price, say passing back through this, maybe coming down to this area, then pushing back up. You can also see we've reacted off this volume imbalance right here, which is a good area to see. Generally, what's this, 230 open. At this point, because like I said, because we're all-time highs, I would just be looking for general continuations, and I'll be looking for that to set up on the lower time frame. So that's how I would go about the bias for this particular session. Today being all-time highs and a bank holiday, and having no structure on the left-hand side to look at, this would be a day where I'd be a lot more lenient on the bias, and I'd say, yeah, do you know what? I don't have a bias. So actually, to formulate any trades today, to formulate any setups, I need to have a very, very short-term bias. So that's more likely to be on the 5 or 1 minute chart. So I'd be looking at how you know, this 5-minute fair value gap's formed. Okay, how do we sit up here? Do we consolidate to some extent, drop down, and then we start going back up towards the highs, something like that? At the moment, clearly, order flow is just bullish. But if we go back, and I'm going to give another example, what I'll do is I'll go back here, go back to a previous time, just make sure it's not all, where am I? September. Okay, I'll do something like this. And I'll analyze it from here. So I'll go over to to around the time I would be analyzing. And also another thing, obviously, be referencing the economic calendar, which would be this one here. And what day is it? 17th of September on this particular day. Let's have a look at that. 17th of September, so 1:30 news. You've got FOMC coming up the next day. So I'd expect some decent movement on this day. Pretty full in terms of news. You can see there's the 1:30 spike, so I'd be watching that. And then let me just pull it across so it is at 2:15. Or for starters, let me actually go back here because I want to reference the 4-hour chart. Now, if I'm doing it on the replay, it's really hard to actually that candle just runs up to 11 o'clock, so it's very hard to go like onto the daily time frame, have a look and not see what the day is done if you're looking at it like this. But generally I could see prices traded down on the daily chart, come back up into the range. We're getting very close to the highs up here. I like the idea of these equal highs up here. That's nice. Now if I'm looking at previous areas of support, I'm seeing the 4-hour fair value gap down here. Again, if you want to mark out order blocks, you could also be marking out that order block as well. Generally, I'll do that with a dashed line. I'll do fair value gaps with a solid line. So you can mark out that as well as a reference point. I don't personally, I'm not too interested in them. I'll be marking out the fact that prices come up very close to this high. I'll just mark out a buy side liquidity point. Since it is, what is it? Is a Tuesday, you can see that Monday's been a very small range, Tuesday's dropped below it, so it makes sense that we could come up into these highs. I'd be dropping down into the hourly. Now I just get closer to the actual time here. So there you go, as we've approached the start of the session, the AM session, which is marked in red by the way, you can see we've already moved up into that high. So now I'll be looking, okay, do we start to get some continuation through? Can I see any areas of previous support? Really not much. Another thing to be said as well is I will be using all three markets in this analysis. So I will actually bring these up as well, just for reference to help me out. And I should probably go back and have a little look at their 4-hour as well, to be honest. Let's go back. And I also use dollar. Recently, dollar's not been... Am I going to be able to use this? Don't know if it's too far back. Dollar's not been very useful as of lately because it's been switching between correlated and uncorrelated. So yeah, I've not been using it all that much. So again here, if we look at these charts, see prices come lower, moving away higher. We had higher time frame buy side up here that we'd swept out in Dow. And S&P, I think, is that top chart. Yep. S&P getting very close to these highs up here. I'd like to see price move up there on a higher time frame basis. Looking for some 4-hour support at the same area. We found support, that same wick on NASDAQ. Don't really see that. Again, you could be looking at something in here, but I like to look at fair value gaps. Not really any areas of 4-hour support, but clearly we did find support, so I want to see what was likely to have supported price there. If anything, you could see some S&T on these lows, higher lows in Dow, lower lows in both NASDAQ and ES. See a previous area of consolidation right here. Prices come down into it and moved away. That is interesting. Now, one of the things I'm seeing here on the hourly chart is this hourly fair value gap that's just below price. I'm going to mark that in because there's a chance that we want to push down into that and then go higher. And again, now I'm on the hourly. Let me go across to the actual time because it'll be more relevant. Right, so obviously we've moved away from that, so that's not relevant. And you can see we're very, very close to those equal highs. So it's very clear that price is going to be moving into those equal highs, most likely at the open. Looking for previous support, and this is not the easiest to show here, but previous support in Dow. You can see the hourly fair value gap, price came through it, tapped back down, moved over that premium and started to move away. And if we look at the hourly in this market, like I said before, there's nothing really to see there. Let's have a little look in this first. Let's get a little bit closer to the actual time. And I don't do a lot of back testing like this anymore because I pretty much just get on the charts every day and do it. So I haven't done this in ages. It's probably a lot easier if you want to use FX Replay. I used to use that when I was trying to find certain strategies and see what things worked. Right here on the 15-minute, I'd know there's sort of previous support down here. I'm marking this 15-minute right here, and I'd probably mark in this one, and I'd be seeing how does price react to this particular 15-minute fair value gap. Do we move past it? If we move past it down to this one, do we just wick and come back up, or can we just stay above? And I'd ideally want to see price stay above. We're getting very, very close to that 130 high, which I'm very interested in seeing ran out. So we go back to the 15-minute, go on to these other markets. Probably just do this one at a time like this, which is probably not best. Usually I'll have two screens up with four charts. So we've got that hourly fair value gap. So there you go. So here's a problem in Dow, but the fact that we're coming down towards that hourly fair value gap again. This is very important. We've already come down into it once, moving away, came down into the premium, and now we're coming back down once again. So to me, this is actually more likely to seek the lows here in Dow. And this is where correlated analysis is used. Just because Dow goes short doesn't mean the other indices will go short as well, but you can use it for sort of momentum techniques where you say Dow's going short, but I think he's going to pull back into the range a little bit, and both Nasdaq and S&P look like they've got a buy side target they need to sweep. Those will both correlate in those movements together, so I can use that to get in a buy in Nasdaq or S&P. So again, in S&P here, I'll be marking out this 15-minute. I really want to see this find support. Yeah, we can pop underneath here, but that's not necessarily ideal. And I don't want a big, strong push underneath, otherwise we will be going for these lows instead, and we'll stave off going for those highs. And then finally, I'll just go down to the 5-minute. This is right before the session opens, and for the most part during the session, I'm watching the 1, the 5, and the 15. So now and here on the 5, I see some equal highs. So to me, right now, I'm thinking price is likely to move up at the start of the session, at least in Nasdaq and S&P. Not too sure about Dow as it currently sits. Looks more like to seek the downside. So I don't think I can actually... I think because I've gone back too far, I can't actually... yeah, I'll have to just go and have a look and go back manually. How far can I actually go? What did I say it was? I said it was the 17th of September. Let's see, can I get back? I'll have to just do this. I'll have to just get to the lowest time frame. You can actually see what's happening here, but... if I can get down to the 2. I forgot if I go back a such and such distance. I should be able to get back on a 1 minute then. I wonder. No, it doesn't look like it. It looks like I can just about do a 2 minute. That's a shame because I've basically seen what else happened here. But let's have a little look at what occurred. I'll go over to these other markets in a second. can see in NASDAQ, I had this high marked out. There's the 230 open, price shot up into it. Then I was looking at, okay, are we supported above this 15-minute? We come back down towards it, come back in, move short, and we pretty much just bounce back and forward for the session. There's really not a lot to see here. I'd like to see it correlated with these two markets, so I'm just going to go over to those now as well. But that initial move up into the 130 high was correct. Let's have a look at what went on in this market. This was the 17th, right here. So I was looking at, there was a 15-minute fair value gap here. I said we could pop underneath these lows, but it wouldn't necessarily be ideal. It did do that and pop back up to the upside, but like I said, this day has ended up messy here. So that kind of makes sense. The price is going to move outside of the areas you'd like to see it move. If I just go up to the 15-minute chart, have a look at those old highs I was looking at, which was back here. It was this one, wasn't it? This is what I was looking at, price moving up into. And I think it was S&P that I saw the equal highs. So you can see at the start of the session, we swept out those equal highs. And then, like I said, came back down, corrected back up towards that buy side target. And this is where it's important to use bias in the context of your strategy. Just because I say it's going up into the high doesn't mean it's going to do it absolutely straight away. Like I said, we could pull back down underneath these lows, which we did before going to the high. And once it reaches a target like this, everything can change. So bias is relative, and oftentimes when your targets are fulfilled, then they're no longer valid. You have to redefine, okay, am I going to continue to go in the same direction or not? Here we go. In Dow, if I just mark back in that hourly fair value gap again, that's the very thing that I was mentioning occurred. I had this hourly fair value gap marked in that was supporting price at the time. But I said at the start of the session, I said that price was moving to the downside. Where was it exactly? I was on the 5-minute chart, I believe. I was on a 5-minute chart and I could see this down close bar here, and I said that looks more likely to not be supported higher and to actually move through the hourly fair value gap. And you can see there, you're targeting the low that was violated right on the 130 candle. Ultimately, we start making our way back up to the upside, and we do get a little bit of chop. But that's why I say correlated analysis is important. Now, this is probably a bad day to have actually picked out to give an example, but I did pick one at random. Maybe I'll do one. In fact, I will do one where I do it before the session. Maybe just cut it throughout the day every time I have a new idea of what's going to go on. But yeah, essentially that's it. That it has to be relative. You can look at areas like this where, okay, we came down through the hourly fair value gap. We've hit the premium again. We shouldn't now need to come back down to it. If we do, we're more likely to violate it to the downside. Then you say, okay, if we violate that hourly, are we still continuing to the upside? Why would this be supported? Well, if we move up to the 4-hour, on this day right here, Tuesday, you'll see that at 3 o'clock, the 4-hour fair value gap was formed. It was when this candle formed. Go back to the 5-minute. I suppose actually that wasn't the case in this case. It was actually formed where price came down later in the day. So that's not what it was supported by, but it may have just been returning to a discount in relation to this area, in this range. We've got multiple hourly fair value gaps here. And I'd be looking at these considering, does price want to continue higher? Generally, I've got a higher time frame bias anyway, so I'd probably be looking for support to continue higher. But ultimately, this would have been a day that you might have not got on well with anyway, just because of that back and forth nature. So it's a good example of when it's actually very, very difficult to get it right, and in reality, you need to be switching up multiple times throughout the day. On a day that just trades in one or two directions, like this one, for example, where price just trades to the upside, very clearly, hits some kind of high time frame point of interest, and then starts turning around, and then you can easily play it back down into the lows. This is very, very easy, where you just have 2 biases throughout the day. Same with this one, just 1 bias throughout the day, which is basically just up. It's unlucky that I decided to pick the day that flicked back and forth, but the only 2 predictions that I put in was that price would reach up into that 130 high in NASDAQ and would reach down into this low and violate this 1 hour fair value gap in Dow, both of which were correct at the start of the session. So anyway, I hope this helped you understand how bias is relevant to trading. It's a lot more nuanced than, oh, I've got a bullish bias there, I've got a bearish bias. You can start with that, but really you need to understand how long does your bias last for, when is this changing, when have your targets actually been met, and how does this work in relation to finding a trade. So oftentimes you want to be looking at previous areas of support and areas of invalidation where price shouldn't come underneath, otherwise the current order flow is broken. And these are the important bits to go over. So hopefully this cleared things up. It did seem a little bit disjointed, and I will probably do another video on it. I think it'd be a lot better to actually do it at the start of the day, and I can show the entire process before it occurs. I can go over all the charts and not have the crap where I can't go to different time frames on TradingView. And if anyone wants to see that, let me know. So thanks for watching.